For another weekly. We're streaming live episode 148 uh, to TikTok, Instagram, Facebook, YouTube, LinkedIn, Twitter. And here we are talking about how the Bank of Canada has raised its prime rate, or the prime rate in Canada, to 7.2%. I just can't believe how high rates are in Canada right now, and neither can my clients. It's quite substantial, these rate increases we've been seeing, and there looks like there may not be an end in sight for the foreseeable future. There was some comments made by Tiff Macklem yesterday about inflation, about prices in Canada, about rates, and how long they will remain high for. One of the things Tiff Macklem said yesterday during his monetary policy report was that the Bank of Canada believes that inflation will remain high until mid 2025. And when he says inflation will remain high, that means that inflation will remain above the 2% target rate that Canada has set for inflation. Right now, inflation sits at 3.4% in Canada. So it's not too far off that 2% target at the moment. We've seen inflation peak in Canada in June 2022. We were looking at an inflation rate around 8.1%, which back in June of 2022 was absolutely ridiculously high. So with inflation currently sitting at 3.4%, I think we've made some good progress in the 12 months since we've seen inflation peak in 2022. However, what remains concerning is the fact that Tiff Macklem, the finance minister for Canada, did mention that inflation will remain over 2% until mid 2025. Now, does that mean that the Bank of Canada will continue to raise interest rates until mid 2025? Or are they going to take an approach where they've raised interest rates as high as they can currently, and then mid 2025, it will take that much time for these rate increases to work their way through the system and for inflation to come down to that 2% level? I am looking at the numbers, looking at the data, trying to see exactly how this will pan out. One thing I'm noticing for sure is that Canadians are having an extremely difficult time qualifying for a mortgage. One thing that was very easy for Canadians to do just 3-4 years ago was to be able to qualify for a decent home. And now there was an article that just came out actually 2 weeks ago that I did a video on my channel here, where it takes an income of approximately $175,000 now to be able to buy a home that's just 1,500 square feet. That's not a mansion. That's not a big home with a big property. Standard home, 1,500 square feet. You need an income of $175,000. So, as mentioned, Canadians are having an extremely difficult time now qualifying for a home, especially if you're a single individual. I'm seeing a lot of folks that are single individuals making $75,000 a year, which is a really good income for a single individual. And they may be separated or divorced, and also having child support, spousal support of an additional $15,000 a year for a total income of $90,000 a year. And they are only able to qualify for a $400,000 home. It really puts those folks in a very vulnerable situation, because not only is rent out of control in Canada, but they cannot even qualify for a home in Canada. What are these folks supposed to do? And with inflation projected to remain high until mid 2025 now, it's going to be extremely difficult now, just it seems like for the foreseeable future, for anyone to afford a home. Now, institutions are still buying homes. There was some videos seen by professionals in my area, specifically Ontario, Canada, real estate agents saying that they are getting more offers from institutions wanting to buy homes than individuals. That means companies are buying homes versus people that are citizens. And why are these companies buying homes? Well, it looks like that a lot of the demand now is for companies to buy homes and rent them out and turn them into businesses. And these businesses are buying homes instead of Canadians. Well, Canadians are the ones hurting. They are the ones trying to buy the homes for their families, for their kids, for their parents, or even for an investment, maybe a rental property that they can rent out and earn a side income. Well, a lot of landlords in Canada are hurting as well from these rate increases. There was talk on 680 News, as well as a lot of different professionals in Canada saying that there's a lot of condo owners in Toronto that have owned condos, do own condominiums in Toronto, that now do not make any cash flow at the end of the month. That they would be in risk of power of sale foreclosure if their tenants stop paying the rent, because not only is the rent not covering all the expenses for that condo, but they are putting money in from their own income trying to keep the place afloat. And when things like that happen, it really puts tenants in a bad situation, because if the landlord can no longer carry the property, they will have to sell the property. And typically, because the demand is so strong in Canada still for houses, that the home will be bought by a family and then will move in, and that tenant will no longer have a place to live. Not sure what the plan is for Canadian landlords. I myself have an investment property, and it is very difficult to keep it afloat these days with mortgage rates where they are at. So, with prime rate now at 7.2%, what does that mean? How does that affect affordability? Well, prime rate was at 6.95% just a few days ago, and now prime rate's sitting at 7.2%. Does that affect affordability for Canadians? Will it impact the amount Canadians can afford? Well, it will. I was looking at numbers this morning, and the impact, it depends really if you're a single person or a dual income family, but the impact on affordability, it's another $15,000 to $20,000 less now on affordability for the typical Canadian family. Whether it's a single earner or a double income earner, that's the rough range that we're looking at. Will this cause home prices to come down? Well, looking at the home prices for the last 4 months, we're looking at May, April, March, and February. Those months, we have on record that Canadian home prices did increase for those 4 months. And those are 4 consecutive year-over-year increases for February, March, April, and May, even though rates have been where they are at. In my 13 years experience, I've never seen rates this high in my mortgage career. And as a mortgage broker, I'm left trying to help clients now afford any type of home. I have folks with 50,000, 100,000, 200,000 saved in their bank account, trying to purchase a home for themselves. And if they are a single income or single earner, single person, even with $200,000 down, they can't even buy a home for themselves. And yes, it's not a good situation for either party, as mentioned. Thanks for watching. It's not really good for Canadians. It's crazy how high interest rates are. What is an AISH? So what I'm doing now is when we calculate figures now for Canadians, we try to look at everything. We try to look at, can they add a basement apartment onto the home that they are buying? Will the lender allow us to use all the income, a portion of the income? Will that help them get into a property that is on the market? Even this morning, I was looking at a client with $200,000 down payment, and they want to add a second suite or buy a home with a second suite. And that second suite's almost earning $2,000 a month. They can't even qualify for that home. And they have excellent credit, no debt, and earn a very good salary compared to the average Canadian. They can't even get a home with a basement apartment. And they're willing to to rent out part of their home to get into the market. So time and time again, we're looking at these files. They're not able to move forward. These folks are saving money. They are with low debt, and it's just almost impossible or virtually impossible for them to get into a home. So then that comes the question, who is buying the homes in Canada? Who are the folks that are able to buy the homes? Assured income for the severely handicapped, disability benefits. Well, I'm not sure if that's a Canadian thing or not. In Ontario, we have Ontario Disability Support Program. We are able to use that in Ontario to buy a home. So if you're in Alberta and you're earning this income, I'm sure that you can use that towards buying a home. However, the amount here, $1,700 a month, that's not really going to be able to qualify you for very much home at all. You probably will not be able to get into the market with that amount of income. You'll probably need two co-signers to go on with you. So who is buying these homes in Canada? Well, a lot of people, what they're doing now, and it's specifically multi-generational families, we will have mom, dad, grandma, grandpa all buy a home together. And grandma and grandpa, they either have a pension or they're still working. So that's four incomes. And with four incomes, with each person making approximately $50,000 a year, that gives us a total income of $200,000. And that allows that family with four people on title now to buy that 1,500 square foot home. Can you believe that? A family of four living in a 1,500 square foot home. And then you have the children also running around. So you have 6, 7 people living in this home. It's quite crazy. And that's the typical situation I'm seeing in Canada. 4 people on title now. No longer can the single person afford a home on their own. That is unseen because, as mentioned, you need approximately $175,000 of an income to buy a 1,500 square foot home. I mean, there are private lenders out there that will probably lend money to you. I never recommend that direction because the fees are extremely high and the rates are extremely high, and private lenders usually are looking forward to homeowners not paying their mortgage payments so they can take over the home. So it's never really a good solution to go private lending. And also those payments are even higher than the banks. And the interest rates are even higher than the banks. Keep raising rates until young people can enter the housing market. You see, rates are going up, but also house prices are going up. They've gone up 4 months in a row now. Not sure if that's going to change. We have 500,000 Canadians entering our country every year, and they have extremely high desires to buy homes. As a matter of fact, there are programs out there for Canadians to buy a home if they are new to Canada. Anyone who's new to Canada for 3 months minimum can apply for a mortgage. Why is that? Well, the government has made it very easy. You don't need a credit score, and you only need 3 months work experience in Canada to be able to qualify for a home. So the way to buy a home, the strategy I'm telling Canadians these days to be able to buy a home is, if you're a young person, 20s, 25, 30 years old, get some friends together or buy a home with your family. So when I say friends together, I say you and 3 friends, you all have an income, you all buy a home together. 4 incomes and you can do it. Or if you are wanting to buy with family, what you can do is you, your brother or your sister, and your mom and your dad, or your grandma and grandpa, you can all go on the mortgage together. And that's the way to get into a property. Because the rates are so high, we need all those incomes essentially to be able to qualify you for the lowest rate mortgage. And these are families that are coming over to Canada. They're coming over to Canada and they have money in the bank. They're here just for a few months, and these are the folks applying for mortgages now. And they're competing essentially against the single and dual income families that are trying to buy a house for their family. And there's 500,000 Canadians each year, 500,000 new Canadians each year that are doing this. So where does that leave folks that are in variable rate mortgages right now? Well, if you're in a variable rate mortgage right now, as you saw, Canadians had the prime rate raised to 7.2% as of July the 12th, 2023, 10 a.m. That is an increase from 6.95%. Tiff Macklem did make an announcement yesterday during the monetary policy report that he believes that inflation will remain above 2% until mid-2025. So if you're in a variable rate mortgage, you're having your payments go up or your amortization extended almost every month this year. And because of that, that's quite a lot of pain for that mortgage holder. And those who are coming up for renewal this year or next year will be faced with much higher interest rates. I was looking at interest rates this morning, and 5-year fixed rates are in the high fives. 2 and 3-year fixed rates are in the mid sixes. And prime rate now is at 7.2%. Compared to 1 and 2%, that is a much higher interest rate than I've ever seen for a mortgage in my 13 years experience in the mortgage industry. Well, let's take a look at house prices. House prices have been increasing in Canada last 4 months, despite rates going up, despite Canadians having a hard time qualifying, and they've been going up despite not being able to afford a home for a single person or a dual income family. Right now, the average Canadian sold price is sitting, wait for it, $729,044. That's a much higher average house price than we saw earlier this year in January. Much higher than last year when prices dropped in February of 2022. During the peak of February 2022, there were quite a lot of folks that were selling and buying homes. And they bought those homes at that high peak with 1 to 2% interest rates. What a lot of lenders right now are concerned about is if those people come to renewal, will they be able to afford their home when their interest rate from 1 or 2% gets renewed at 5 or 6%? Will these folks be able to afford their home? I know right now there's a lot of institutions buying homes. What I'm seeing right now from real estate agents in the industry is they're saying that they are receiving more offers on homes from institutions, companies that invest in the real estate market for the purpose of rentals versus individuals and landlords. What does that mean? It means that the demand right now is not as strong from the Canadian individual homeowner or the Canadian landlord, but it's strong from companies that are buying homes in Canada. What does that mean? Does that mean that Canadians shouldn't really expect prices to come down because we have these companies in Canada trying to buy up all the homes anyway? There was a few articles I read right now. Amazon is getting into the house rental business. They are building full neighborhoods with the intention never to sell these homes, but actually to rent these homes out. Is that a good thing? Is that a bad thing? I'm interested to know your thoughts on that. All right. So with the average national house price now exceeding 729,000, where can the single person now buy a home in Canada? Well, as I mentioned, the single person earning $90,000 a year can afford a home of up to $400,000. And if they can afford a home up to $400,000, the best place for them to move, and pretty much the only major city for them to move to, is Winnipeg, Manitoba, where the house price average is still less than 400,000. There they will be able to buy a home, average home in Winnipeg, in their price range. Makes it very difficult though, because not many people want to move to Winnipeg. What's happening with inflation in Canada right now? Well, inflation did go down a full percentage point from April to May. We're looking at an inflation rate of 3.4% in Canada. And as mentioned earlier on in this video, Tiff Macklin, during the monetary policy report yesterday, has stated that inflation will remain high until mid 2025. That's quite a long time. That's 2 more years of inflation above target. Does that mean that the Bank of Canada will continue to raise rates until mid 2025? I don't think so. I think that if Bank of Canada raises rates any more than they have now, we will see a wave of foreclosures and powers of sale. I'm seeing people just hit their renewal right now and realize that, oh, wow, I need to get a part time job. Oh, wow, we need to get a third full time job in this house just to be able to afford a home, their home that they're living in. Mortgage payments are jumping quite significantly on renewal. I think probably what the expected case will be is that rates will remain high until mid 2025, but not so much increase until mid 2025. That way, inflation can at least come down from 3.4% to 2% in mid 2025. But that could mean that actually house prices could soften slightly. But if they don't, from that surge of immigration we're seeing every year and institutions buying homes more than individuals, it's just going to put the Canadian homeowner or potential homeowner that much further out of reach. I was on a call with Rob Carrick. He's a specialist with the Globe and Mail. He does the financial forecasts and has a finance column all about mortgages. And I watched what he had to say about Canadian home ownership and interest rates. That was just about a week and a half ago. And there was one comment that he made that really stuck out during the presentation. That comment was that he has said that the middle class has no hope in home ownership now or in the future. Essentially, the middle class has been removed from the possibility of any home ownership in the future because of where rates are at, and because of where rates are going, and because where the house market is now in Canada. So lower middle class, apparently there's no hope for home ownership for you in Canada, according to Rob from the Globe and Mail. However, my strategies, as I mentioned earlier on in my podcast here on Canadian Mortgage Weekly, we need to encourage folks to team up. Yes, any advice for the first-time home buyer? Team up with family. I'm seeing first-time home buyers team up with family. What they're doing now is husband, wife, or partner and partner, and mom and dad all going on title together. That's 4 incomes, and that's the minimum I'm seeing right now. Where are rates going? Well, Tiff Macklem just said that the inflation rate will remain high until mid 2025 yesterday. That means that rates will remain at the level they are at, if not higher, until then. Now, at the same time, should we trust Tiff? He did say rates will remain low just 2 years ago during COVID for years to come. I don't think we can really trust what he has to say because it can change at any time. And you're right. Side hustles. That's what I'm seeing people doing. A lot of people are starting side hustles, side gigs, part-time jobs just to float their home. Now, some positive news from the United States. We did see inflation in the United States actually go down to 3% in June of 2023. That's down a full percentage point from 4% in May of 2023. And there's a US Fed rate decision on July 23rd, actually July 26th, which they will decide whether or not to raise American interest rates. Do you guys think America will raise their interest rate? I know they kept their policy rate at 5.25% at the last Fed rate hike meeting. So it could mean with inflation now down another percentage point that Jerome Powell will keep rates where they are at. Unemployment in Canada has gone up now 2 consecutive months in a row, up 0.2% from the prior month in May of 2023. We're waiting to see what the June numbers come in at, but if unemployment does go up again, we'll see a 3-month consecutive unemployment increase in Canada. Now, the caveat here is that Canada did also create more jobs in May of 2023. So not only is the unemployment going up, but we are creating more jobs. What does that mean? Well, it means that more people are looking for work. I think that stems from just higher costs, higher mortgage costs, higher housing costs. More people have to have, as my friends on TikTok here are saying, multiple streams of income to keep afloat. What's the 5-year bond yield doing in Canada? Well, the 5-year bond yield, it did top 4% last week. That is the highest bond yield we have seen since the financial crisis in 2007, 2008, 2009. That means that fixed interest rates have gone up quite considerably. But as of today, it's sitting at 3.74%. It's down a full quarter point from hitting 4% just last week. So that quarter point decrease occurred when the US announced that their inflation had gone from 4% to 3%. So good news overall for inflation in the United States. Hopefully that translates for lower inflation numbers in Canada. I'm expecting to receive inflation numbers for Canada on July 18th. So we'll have that for us here on next week's episode of Canadian Mortgage Weekly. And that will be episode 149. I'm getting close to celebrating 150 episodes of my podcast, which is quite exciting. I'm pumped about that. I started this podcast during COVID, during a time when house prices were booming and interest rates were very, very cheap. Okay, what's the CDOR rate sitting at? CDOR rate sitting at 5.49% as of Thursday, July 13th. CDOR rate measures how competitive variable rates are, and right now, because of where the CDOR rate in comparison to the prime rate means that it's not really that competitive to get a variable rate. However, variable rates could still be for you depending on your financial situation and your home ownership goals. If you're considering getting a mortgage in Canada, make sure you talk to your mortgage specialist about variable and fixed to see what is right for you for your home ownership goals. Variable always provides additional flexibility. I had someone take a fixed rate mortgage out in January of this year, and they just called me last month to break that mortgage. That is 6 months in. And after taking what they wanted to was a 5-year fixed rate against my advice, they actually are faced with a penalty of almost $60,000 to break that mortgage. Can you believe that? And this is a bank in Canada, a bank, not a lender, mortgage lender, but a mortgage bank that is charging almost $60,000 to break that fixed rate mortgage that they just took out in January. And that was just to refinance and be able to pay off a line of credit. Anyhow, so with house prices continuing to go up 4 months in a row, where do we think house prices will go from here now that prime rate has hit 7.2%? I know that affordability, because of the prime rate going up 25 basis points, has dropped 15 to 20,000 for the average size mortgage for the average Canadian home buyer this month. And because of that, fixed rates have been trending upwards as well. I will keep monitoring the house prices in Canada going forward. I'll keep monitoring affordability. But in the meantime, if you're a first-time home buyer or someone that's trying to get into the market and you're having a difficult time, remember, it's not your fault right now. It's happening to everyone. And the only folks that are able to get into the market right now are those who are teaming up with other family members. So it's 3, 4, sometimes 5, 6 people on title, and others that are going with friends. I've seen people team up with other friends and they will both live in the house together. 2 couples, 4 incomes, and they will share the house accordingly. Then after they live in the home for 2 to 3 years, they plan to sell and then hopefully buy a home for each. After building some equity and paying down that mortgage and increasing their income and their credit with a mortgage on a credit bureau. So prime rate now sitting at 7.2%. If you do have any questions about your variable rate mortgage or mortgages in general, I encourage you to reach out to me. My name is Joe Bladdock. I have 13 years experience in the mortgage industry as a mortgage broker. I'm able to help you with your mortgage. I deal with all the banks and lenders in Canada and can help you with some advice or whatever you need for your mortgage. In the meantime, make sure you hit that plus button. Follow my account, whether you're watching on YouTube, TikTok, Instagram, Facebook, Twitter. What's the other one? LinkedIn. And I encourage you to follow me so you can catch up my next episode next Thursday. And if you do follow my account, I usually release a new video every day of the week talking about mortgage news, mortgage hacks, and mortgage tips. So thanks for watching today. Appreciate you tuning in to Canadian Mortgage Weekly Live for episode 148.